Good morning, friend. Navigating the oil slips and description on September 29, 2025. Oil prices experienced. This slip is primarily driven of crude oil exports from Iraq's semi-autonomous Kurdistan region via Turkey, which had been halted for over 2 years due to disputes over revenue and pipeline issues, and reports that OPEC Plus, the organization of the petroleum exporting countries and allies, is planning another production increase in November. The Kurdistan exports estimated at around at peak are now flowing again. Federal government and the Kurdistan regional government reached an agreement injecting fresh supply into an already softening market. This resumption ends a prolonged standards of that begin a march to Turkey shut down the pipeline following an arbitration ruling favoring Iraq in a dispute with the KRG votes. OPEC Plus planned the hike adds for November as part of a phased unwinding 2026. This move follows recent decision to boost output by 130 in October, signaling a strategic shift by and slowdowns from economic headwinds in China and the US. However, not all much of the 1.66 million BPD voluntary reductions has been theoretically on already overproducing while Russian additional barrels hitting the market may be limited to contributions from Saudi Arabia and the UAE, potentially avoiding a full flood but still contribute. Geopolitically, this development highlights tensions in the Middle East. Kurdistan's export to the stabilizing Baghdad finance but straining relations with the KRG for non-OPEC supply growth from the US, Brazil and Guyana, while like US elections and potential Mid-East escalations. Economically, lower oil prices could already facing budget strains and US shale producers who may see reduced profitability and investment demand side factors including Chinese industrial data and US inventory barrels amplify the bearish sentiment. Does not rebound but tight near-term supply risk might cap deeper falls. Volatility for traders. Discussion on spare capacity and potential US political implications ahead. To visualize this analysis, I recommended images as a line chart showing over the past month a map of Kurdistan's oil pipelines and export routes to Turkey of comparing OPEC plus production cuts versus actual investment and market advice. Here are the first 25 pieces of advice. Is first, have you reviewed your energy stock portfolio to access exposure to OPEC plus decisions? 2. Are you considering diversifying into renewable energy? Third, should you monitor US shale production? Fourth, have you hedged against further price drops using futures contracts? Fifth, is it time to evaluate the impact of investments? Sixth, are you tracking geopolitical tensions in the Middle East that could reverse the price slip? Seventh, should you analyze historical OPEC plus output hikes to predict market reaction of lower fuel costs for transportation sector strength? Is your risk tolerance aligned with potential volatility in oil, exploring opportunities in downstream refining companies? 11. Should you consult the economic forecast for US inflation easing due to this trend? 12. You have updated your watch list for 13th. Is it wise to reduce leverage in March? 14th. Are you factoring in potential US elections outcomes affecting oil policies? 15th. Should you investigate bonds from oil exporting nations for E? 17th. Is your portfolio balanced against non-OPEC supply? 18th. Are you preparing for short-term bearish sentiment in? Should you attend webinars on global energy transition? US shale producers? 21st. Is it beneficial to follow real-time? Is 22. Are you considering currency pairs influenced by oil price? 23. Should you diversify into gold as a hedge? Uncertainties 55 to $60. 25 is emergency fund sufficient to weather potential economic slowdowns from cheap oil. Investment and market advice part 2 question. Here are the next 25 pieces of advice. Continuing the theme with questions focused on broader economic and 26. Have you assessed how lower oil prices might? 27. Are you monitoring distillate inventory builds for signs of oversupply? 8. Should you explore ESG funds that the 29. Have you considered the long-term shift towards 30th? Is it time to audit your exposure? 31. Are you following Saudi Arabia's market share strategy? 3. Have you diversified into agriculture commodities affected by energy cost? 34. Is your retirement plan adjusted for deflation? 35. Are you tracking UAE's productions capacity? 6. Should you join investor forums discussing Kurdistan's revenue disputes? 37. Have you evaluated airline stocks benefiting from reducing fuel volatile energy sectors? 39. Are you incorporating climate policy changes into your? Should you review historical data on oil stocks and recoveries? 41. Have you considered bonds from stable oil importers? Is your strategy resilient to Russian exports contents? 43. Are you exploring tech innovation? 44. Should you attend conferences on global supply chain impacts? 45. Have you calculated personal fuel savings from this price? 46. Is it beneficial to follow boomerang? Terminal 7. Are you hedging against currency devaluation in oil exporting countries? 48. Should you diversify into utilities gaining from lower input cost? 49. Have you simulated worst case scenario? Is your overall approach emphasizing patience in this bearish phase? Please like, subscribe and comment. These scripts make two photos also. This is the Kurdistan export search. Exports back online. Fund running dry. Survive oil crisis. Is it enough? Is inflation over? Forecast time to act. Easing inflation fact. In fact, CAD oil correlation. USD versus oil. Currency oil link. Brazil, Guyana versus non-OPEC supply. Portfolio balanced. Oil flowing again. Please like, subscribe and positive or negative comment in this video. Thank you friends. We will meet next episode.